The development and types of banks. Banks are one of the main pillars of the modern economy. As financial institutions, they play a strategic role in managing public funds. Banks act as intermediaries between those who have excess funds and those who need funds for various purposes, such as investment, consumption, or business development. Their role is vital in ensuring the financial stability of a country. In this presentation, we will discuss how banks have evolved over time, from simple institutions in the medieval period to digital entities in the modern era. We will also explore the various types of banks based on their functions, ownership, and operations, as well as their significant role in supporting economic growth. Definition of banks. A bank is a financial institution responsible for managing public funds with three main functions. First, banks collect funds from the public in the form of savings, deposits, and checking accounts. These funds are then used to provide loans or credit to those in need. Second, banks distribute these funds to individuals, businesses, or governments for productive or consumptive purposes. Third, banks offer various financial services such as money transfers, bill payments, foreign exchange, and investment management. More broadly, banks play an essential role in creating financial stability and liquidity within society. They provide a safe place for people to save money, offer access to credit, and facilitate efficient transactions. Banks also assist governments in implementing monetary policies to maintain economic stability. The development of banks. The development of banks began in the 12th century in Italy, with the establishment of the Bank of Venice as one of the world's first financial institutions. At that time, banks were used to store money and facilitate international trade. In the 17th century, central banks began to emerge, such as the Bank of England, which was responsible for monetary policy and currency issuance. Commercial banks also developed during this period to meet the general public's needs, such as savings and loans. In the modern era, digital transformation has revolutionized the banking industry. Services like mobile banking, internet banking, and digital wallets have made banking more accessible and convenient. Banks now face competition from fintech companies offering technology-driven financial solutions. However, this innovation also creates opportunities for banks to evolve by adopting technologies such as blockchain and artificial intelligence, AI. Types of banks. Based on their functions, banks can be divided into three main types. First, central banks, such as the Bank of Indonesia, are responsible for maintaining monetary stability, supervising the banking system, and issuing currency. Second, commercial banks provide financial services to the public, such as savings accounts, deposits, and loans. Third, rural banks, BPR, focus on financing small and micro businesses in rural areas, offering simpler services compared to commercial banks. In addition to functions, banks are also categorized based on ownership. State-owned banks are owned by the government, such as Bank Mandiri and BNI, while private banks, like BCA, are owned by private entities. There are also foreign banks, such as Citibank and HSBC, which are branches of international banking companies. Based on operations, banks are divided into conventional banks, which are interest-based, and Islamic banks, which operate on profit-sharing principles following Islamic law. The digital era and the future of banking. In the digital era, banking has undergone significant transformation. Banks now provide digital services such as mobile banking and internet banking, enabling customers to transact anytime, anywhere. Digital banks, which operate entirely online, offer low-cost and highly efficient services. Technologies like artificial intelligence, AI, and blockchain are also being adopted to enhance transaction security and operational efficiency. However, the digital era also presents new challenges. Data security has become a major concern due to the risks of hacking and misuse of customer information. Traditional banks also face competition from fintech companies that provide innovative financial services. To stay relevant, banks must continue to innovate, improve their services, and build customer trust by ensuring secure and convenient banking experiences.